All right. First thing I want to do is I want to talk about all of the recent rally that we've had off of the low. It has been a very violent rally, and if you look at this here, we had the breakdown below 584, and then from here we had this parabolic rally that just went straight up, leaving gaps open in its wake all the way up to a brand new all-time high retest up there right around 600. And I want to go back to January 12th when I talked about how the bear trap was set, how the bears were getting tricked and trapped, and I want to show you how this risk reward for this trade was aligned in the chart all the way back on January 12th, and now you can see how it has played out today. So run the tape, let's go back in time and watch that clip right now. Now, while we're below 584, the most likely probability is that we would come down towards a gap fill at 576 and then a support zone right around 573. And then once we got there, it is possible that's another higher low within a bull market, because if you zoom out, all of these lows are all higher than the previous lows, and this would still be a higher low from the low back here in the 560s. And that means at any point this pullback could end and we could go on another very violent bull rally, which could take us to another brand new all-time high in the 600s. All right, so there we have it. That is the trade plan that we executed. If you're in the TSC trade alerts, you know very well that we capitalized on this move and we are at all-time highs, even though the market has yet to break to a brand new all-time high, especially the triple Qs. But there is a very good chance that we are going to try to break out to a brand new all-time high here, and that will start to squeeze a lot of the short sellers out, because anytime a market is making brand new all-time highs, it is becoming extremely risky to stay short, because bull markets can go up as high as they want, and that is why being a bull is the better trade, because if you are a bull, you could theoretically make 1000% on a stock, but if you are a bear and you are shorting a market, you can only make 100% because a stock can only go to zero. So you have to remember, when you're getting pullbacks within bull markets, those are going to be buying opportunities to get the low risk entries, as long as you're doing it responsibly and you actually are buying something that's in a bull market like we were talking about on SPY. Because in a bull market, after you get a pullback, those are going to be the higher lows within the bull trend before the next higher highs, and that is the message I was trying to deliver to you during that time when we were getting the pullback, because everybody was getting too bearish. I told you they were likely getting tricked and trapped because we are in a bull market. Obviously, in a bear market, you don't ever want to assume that you're reaching a higher low. That is why we always have levels that we manage risk around. So this was a great opportunity to look back in time at what was said and now look at how it played out. And of course, that should be reflected in your trading account as well, because that was an extremely good risk reward setup that we talked about during those late videos. So if you are a new trader and you are still learning, I do suggest you go back and re-watch those videos, because I talked about in detail how we saw this coming. And one of the ways I saw this rally coming as a bear trap was TLT, which is the bond market here. And you can see that played out very likely what I drew as well, with the bounce off of the lows, and we are heading up towards that higher price target at 89 to 90. And again, I talked about all of that in the video of why I told you this would likely lead to a bear trap and a very bullish rally in the stock market. So I'm not going to talk about it again, but this is a reminder that if you are learning, this could be a good opportunity for you to go review that and then see how I was able to make these calls before it happened, and how we were able to absolutely crush this market and not get bear trapped like the majority did. So right now, in this state of the market, we either had people getting bear trapped or completely sat out through this whole move. And that is the danger of not having a plan and getting emotional about your trading. You need a plan around price action and managing risk. And then you just have to go for it, knowing you're never going to win all of your trades. But if you set up the proper risk reward ratios and you continue to get in the best trade setups, you do not need to win all of your trades to be profitable. And that is the message that I continue to try to hammer home here. So now that we're looking at SPY, there's one thing we need to pay attention to, and it's the previous all-time high just below 609, and we do have 3 gaps below to fill as well. We don't know exactly when those gaps will fill, because we could just continue to go straight higher and then fill these gaps at a later date in time, and that's completely fine, because we know there's a very good chance those gaps fill. We just don't know the exact date that they will fill. So as we're going higher, be very aware of this, that these gaps will fill very likely in the future. So that is your risk. You are managing risk to every single gap fill we have to the downside, and the bull breakout is above 598. Above 598, the bulls are really in full control, and there's really no reason to believe otherwise. If we get down below 598, then the bulls are starting to lose traction a little bit, and we could come down towards this gap fill at 594 and then 585. As long as the bulls are above 598, I do think it's likely that we just continue to drift higher. And then if we start seeing selling pressure and break through that support, then obviously we can get more risk off and get ready for a pullback, which could mean even another higher low before we continue even higher. So don't get bearish in a bull market. If you're getting bearish, you're much better off sitting in cash. If you are trying to short a bull market, that's very tricky. And that's where you can actually lose a lot of money. So I don't necessarily suggest shorting the bull market. But obviously, if you're good at shorting and you're able to do it and make profits, then go ahead, do what you want. But if you're learning how to trade, shorting a bull market is the most difficult trade you can make. So just be aware of that. And you're much better off focusing your energy on where you should be buying dips and planning around that in a bull market, because in a bull market, you're making higher lows and higher highs. So you should be going to cash when you're getting risk off and then buying dips when you're getting risk on. So hopefully this is starting to make sense. We will continue to talk about these themes as the year goes on. And these are the ways that you become a profitable trader, by following the price action on the chart. So above 598 is bullish. There's no other way to spin it. And if we get the new all-time high breakout, we're going to be looking for that next price target higher at 616. On the NASDAQ 100 triple Qs, we were up 1.28% today, and a very similar story as SPY. We had the very nice violent bull rally off of the bear trap lows, and we bounced right off of that support level that I gave. And we're very close to a brand new all-time high, which is going to require that break above 538. But we are at a resistance zone we need to respect right around 530 to 531. And we do have the gaps to fill to the downside at 526 and 510. So again, it's possible we just go straight higher and fill all of these gaps later on in time. Or it's possible we just go down and fill those gaps now and still get a higher low before we push higher. This is the risk you're managing to. If you set up the risk reward the way I taught, this is all just volatility within your swing trade and you have nothing you need to do about it. If you're a day trader and you actually know how to day trade, you could take advantage of any volatility, but you need to follow the price when the market opens and have your critical levels. So hopefully all of this is making sense. Continue to follow along. If you're learning, eventually it clicks and you're going to understand this is the best way to trade. And on the triple Qs, you need to be watching this breakout at 530 and this gap fill at 526. If the bulls can hold it above 526 or even call it 524, then they're still in full control and they're likely trying to push higher into the 540s. So stay disciplined and focused. Have a trade plan around following price action and setting up the best risk reward trades with the highest probability, and continue to rinse and repeat and do this over and over all year long. And you will be very happy at the end of the year with your results. And you're going to have done it while managing risk so that you're going to become a profitable and disciplined trader over time. If you want to come trade with me and get the exact percent allocation that I am trading for the TQQQ or the SQQQ, that is my TSC trade alerts, which you can find out how to join by clicking on the link in the description of this video. We are absolutely crushing this market and it's going to be a great trading year. So if you want to come trade along with me, that's the best way to do so. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.